Good afternoon, everyone. This is Henry Gambell with simpleroptions.com, and in tonight's video I wanted to give you a brief review of some of the earnings that we had been looking at today to hopefully apply some strategies that you may want to use next week. In the case of Google, one of the most important things that I can point out in this chart technically is that, even inside earnings and all the radical moves that earnings can trigger, this still respected technical analysis. So taking your previous swing high against your swing low and comparing that against its 1272 extension did ended up giving us an area that we just couldn't quite get through. The way that I had set this up heading into the close yesterday was through the sale of the 855, 845 put credit spread. And the best thing that I can offer in situations like this is when you open up favorably in relationship to that spread and you can take a good chunk of that credit, this is a great spot to do it. The other thing, if you want to try and give it a little bit of time to establish a trend or see if it's going to be able to get going, is just give yourself the opening 5-minute range. If Google is going to be able to perform better on a day like today, you're going to want to see it close above the opening 5-minute range. Granted, with it being such a big stock, this is a pretty drastic swing, but when you finally see that close down here at 855, it just takes the first 10 minutes of the day to say that this bullish move is probably not going to work out, and that's a good spot to manage any remaining positions that you may have. Now, a couple others that were a little bit easier to manage. We had a very similar idea here in Intel, and it's just the same idea that having those limit orders working, or in this case we sold the 38, 36, and we were able to take in about 70 cents on it prior to earnings. But with the squeeze that is fired long, and with a general bullish trend, I thought that was the most straightforward and obvious way to play it, and it acted very similar to Google. You get a decent start to the day, and this one you can also see that that 5-minute range acted much better. Overall, it performed much better than Google, but having those 50% price targets sitting out there waiting is a great way to manage that. The last one I wanted to show you was Microsoft. And this was kind of an interesting situation because most of the time when you make a mistake in trading, it usually doesn't work out in your favor. In this case, what I had done is I went out 7 days instead of using the ones that expired today. So not exactly where I wanted to be. But these unbalanced flies just tend to be so forgiving. We set them up in the 1x3x2. You can see I did go ahead and close out the position, but if you still had it, you're in a really excellent spot because all you're saying is that if it were to pull back into 65, that's actually where the spread matures the best, and as long as it just doesn't fall apart, you're in good shape. And I think that the pullback into 65 would be a good spot to look for that to hold. So if you continue to have the spread, I think you're still in great shape. If you like these ideas, giving yourself a situation where the neutral result is best, a bullish result still makes you money, and then you just have to define your risk to the, if it is to fall apart. Those are some of my favorite strategies around earnings, and hopefully you find that helpful as we head into next week. So you guys have a great weekend, and I will talk to you again first thing on Monday.